Hey, y'all. This is your girl Tobias with Can We Talk for Real? Y'all already know it's the real and the raw. Hey, real talk with real people. I am sitting here again. Last week we talked about the importance of life insurance, right? And just having a regular agent, sister to sister type conversation. We gave you a sneak peek in how we how we constantly communicate when it comes to insurance. And the beautiful thing about it is, we get phone calls all the time. People wanting insurance.
Absolutely.
And so I asked my sister to take time out of her schedule. I know she got clients and all the other stuff going on. She does so much, y'all, but I'll let her talk about it because that's her story to tell, not mine.
You know my story.
I know your story. But today I want us to really just take time. And I don't want us to rush through talking about insurance. Mm-hmm. I don't want us to just lump everything all in one segment because I think it's important. Yeah, it is a lot. And I think it's important. I believe that it's important. I strongly believe that it's important that we take our time with the insurance to just really explain the different type of insurances. I'm still super excited, to get on David Thompson's schedule. He's going to talk about annuities. I'm really excited about that.
Gosh, yes, he knows it.
He knows it back and forth. He is the guru when it comes to annuities. I'm super excited about that. You guys, I will introduce David Thompson to you all. Not today, but I will introduce him. But today we are just going to go through the basic of term insurance. And you know what I forgot to do last week? I forgot to let people know how to find you.
Wow.
Yeah. So before we
sure.
Yeah, exactly. Yeah. So I want to make sure that my listeners know how to find you.
Okay.
Because I know that somebody's gonna want insurance. Okay. Even for myself, y'all know where to find me at. But yeah, so
they can always find me through you. So
exactly, because we work together. And
absolutely, that's the beauty of it.
Exactly, we definitely work together, mm-hmm. and I'm so appreciative of that. So, but today I really want us to home in on the term, and then later we'll talk about whole life. But today I just want to focus in on the benefits and the importance of term insurance and why most of our clients would get term as opposed to whole life.
Absolutely. Well, first of all, I am just so very proud of you. And you're doing such a wonderful job. And letting people know some of the aspects of insurance, very, very important. Mm-hmm. And I'm just so proud to be co-creating this with you. And you're absolutely right. Some people say, I don't want term. I have term and a whole life. And there's several reasons why we're going to talk about that. When you have insurance from your company, possibly your company is paying all of your premiums or a portion of it. You're getting a group rate, which is absolutely wonderful because as a group, your employer has that single certificate. It's mm-hmm. not a policy, but it's a certificate that he actually or she actually has. Mm-hmm. So in that situation, people are saying, well, I have insurance with my job. That's beautiful. Right. Absolutely wonderful. You are protected to, a certain degree. But if you ever leave that job, what happens?
Exactly.
The majority of those policies are term, mm-hmm. or shall I say those contracts mm-hmm. are term. And when you have a term with a group insurance, it's possibly until you decide you no longer want to be there, you get fired, or you resign, or you get retired. Mm-hmm. I had a situation where a friend of mine retired, and he thought he could carry his benefits with him. He had been with this company for 30 years. And unfortunately, 30 years ago, he didn't have diabetes. He didn't have a lot of the issues that he have now. And he was baffled that he could not take that with him on his retirement.
Right.
And if he did, it was going to be extremely, extremely high because either it's portable or they can convert it. And if it's a portable, that means that they'll be able to take that along with them. But there is going to be a cost associated with it. And they would have to pay that company directly.
Right.
If it was convertible, where they could convert it, they could either convert it to a whole life, possibly at the same price, but it's not going to be with a group anymore.
Correct.
So now we're talking about individual. It is most definitely important that even if you have insurance with your company, that you need to have a separate insurance.
That's right.
You know, you really do, to supplement whatever your needs are, whatever could happen, because you then can have the possibility of having a 10, 15, 20-year term. A lot of people don't like terms. I don't know why. I have a term. And with term, you also have a beautiful, majority of our carriers, we have living benefits.
Correct.
I don't carry any product without a living benefits associated. So if you have a large term, which is going to be, the cost is going to be much smaller for a lot more benefits, then you're able to access some of that money if something happens to you critically, chronically, cancer, whatever. You will have the opportunity to access some of that money. Majority of the time it's after 2 years, because you need to pay into that carrier for a certain period of time so that they can see that you're serious, and then they will they have a calculations that they will be able, if it is a disability or something like that, that you can access some of that money. Okay.
Right. And then one of the things that I know, like when me being a single mom, you know, and not just being single, but you know, you have two family and parent households as well, where the children are solely dependent upon the parents' income. So what I find is that, and what we know to be true, when a lot of people want the bigger policies, it's because they have dependents.
Absolutely.
And so when we think about term, whether it be 10, 15, 20, 30 years, we're thinking, okay, if I need to access it for college, if I need to access it, you know, I need to pay off my house, you know, the mortgage protection. I need to pay off my house if something were to happen to my spouse or myself, my children should have a place to live, you know. And so when I think about term, I think about the immediate need of the family.
Absolutely.
You know, as opposed to when my kids were younger, you know, of course they didn't have jobs. They were babies.
Exactly.
You know, but I still needed to make sure that they were able to go to private school. They were able to have the necessities of life.
Absolutely.
And it wouldn't be a burden on whoever would have been their caretaker.
Absolutely. Absolutely. That is very, very important. And so normally young families normally get term so that they can cover. It's a difference when you ask somebody if something happens to you on taking or making sure that your child is okay.
Correct.
With if you got 3 children, you think about it.
Yeah.
You have 3 children,
yes.
and you're asking somebody to take that responsibility because you don't want to separate them. It's a different story when you got $200,000 or $300,000 to take care of those kids until they actually are able to take care of themselves.
Exactly.
And to take care of that person who is taking care. You think about COVID. A lot of people were out of work.
They were.
And if something, there was a lot of people who died who had families.
Yes.
And some of them were single parents, whether it's men, because I know a lot of men that are single parents.
I do too.
Okay.
Yes.
And African American, but we don't see those on television.
Right.
But the thing is, if something happened to him or her, and your family member had to take those children, it's a different story in taking 200, even 100, even 50,000, and giving it to the person who's taking care of your child.
Right.
That's a different story.
Yeah.
It's a big. I mean, some people can't just afford to take on 3 more children.
Exactly. And one of the things too that I want parents to understand, I just had a client to die earlier this year, and she just made 1 year with her policy that she got last year, and it wasn't feeling good and never came home from the hospital, and it wasn't from COVID, it was from something else. But she left behind 2 children. One was 18, and the other one, I believe, was 12, something like that. My point is, you had both of them were the beneficiaries. The 18-year-old was able to access his money because he was 18.
Right.
But the 12-year-old wasn't. And so this is something that the reason why I'm saying this is because regardless as to what type of policy, when you have minor children, you have to be aware and take notes that if you leave the children to be your beneficiaries, they still will not be able to access the money until they turn 18. And they have to contact the insurance company. The insurance company is not checking for them.
Exactly.
But not contact them. When I track them down, like, oh yeah, here's your money.
Right.
You know, that's part of that $32 billion that's out there, where money is there because it's unclaimed money. And so and I always make it a point to ask my clients, I can't make anybody do anything. But if you want to leave your children, please have your children be the contingent, which is a secondary benefit, and whomever you would want to take care of your children, have them to be the primary.
Absolutely.
So that
very good.
So that the children can still have access to their funds for them to be taken care of properly.
And to make sure that you still, even though you have an insurance policy, you still need a will.
Yes.
Okay? You still need a will.
Yes.
And you need to be able to designate. I know somebody out there who loves your children and who loves you, that would be willing to take that responsibility on taking care of your children. And once you have that person, you outline everything you want in that will.
Everything.
So that you don't have the finances of to take care of your children all bogged up in court or bogged up at an insurance company, but be able to release it to the person who is going to take care of them, but outline how they're going to take care of them.
Exactly. And it is, and that's a very good point you brought up, and dealing with the will. Because how many stories and how many people have told us about their parents or their, and how people are fighting over property or whatever it is, where again, it's having that conversation, that uncomfortable but necessary conversation. When you die, what is it supposed to look like?
Exactly.
And I remember my children's great grandmother, when she passed, there was nothing for anyone to do but show up.
That's beautiful.
She had everything taken care of, everything paid for. She knew how she wanted her makeup done. She knew. She did. She gave them a picture. She gave them play. That's how she was.
That's awesome.
She gave them play by play. She even gave them the outfit that she was going to wear in her casket.
Absolutely.
In her homegoing service.
Yes.
So there was nothing to do but to let them know she passed. Send a card. This is the
exactly
the little detail as to when it was going to take place. But everything else, how, that was already done. And she also left a life insurance.
Absolutely.
For her grandchildren or children.
And let me interject on that. You can get as many insurance policies as you want.
You sure can.
For different things. If you want it for charity, you want it for your this policy is going to be for my grandkids. This is going to be for my children. This is going to be for whatever. So you don't necessarily just have to have one policy. The only thing you have to do is make sure you get approved. But you can get as many policies as you want.
So let me ask you this, because we hear, and I want to hear what I know what your take is going to be.
Okay.
But I want the people to hear what your take is when we have the objection of that costs too much, I can just save it. I can take that same money and just put it into a savings account.
Forgive me for getting so tickled. Okay. Because I get tickled with them. Everybody says it. I think I even said it, 20 years ago. What I need that for? I can save that. How many people do you know that actually save?
Right.
I mean, how many people you know that actually designate it, unless it is to an annuity, that has a death benefit attached to it? Right. How many? That it doesn't happen usually.
Right.
Okay. Self-insured. If you really believe you're that disciplined to be able to do that, then do it. I'm free will. Right. It's all about free will. But I'm going to give you the education. I'm going to ask you or request of you, how much do you want to designate? Have some protection. Some protection. Even now with when you have folks that don't want the whole, African Americans now are not going with the whole shebang when it comes to funerals like they used to.
They're not.
They're being cremated.
Yeah.
But cremation, there's still a cost. There's a cost to get the body to the funeral home. There's a cost.
And the funeral home cost.
Exactly. Like me, I didn't know there was a funeral home cost. I said, I got a great mausoleum. It's a cost. But there's a cost to it.
It's a cost for everything.
And why not put $40, $30? Everybody thinks it's so expensive.
And it really isn't. It costs, to be honest, depending on the reason or you want to get insurance to make sure that you cover your burial and leave a little something, or are you looking at, okay, I want to make sure that I'm leaving a legacy, for my children's children and so forth and so on. Then you want to think about what is it, like you said, what's in your budget, what's allowed for that, because the cost of insurance is really no more than you going to Longhorn.
And especially for children.
For children, that's a Happy Meal. It's nothing.
It really is.
It's nothing, because when you think about even with a children's policy. Now, I always say this to my clients: listen, if you just want to start with $10,000, because with a children's policy, you're not trying to make money off your child.
No,
you just want to make sure you have enough to bury your child.
Absolutely.
Right. And as they get older, hey, you know what? Let's add a little bit more to it. You can get up to $50,000 in life insurance for your child, a whole life policy. I'm talking about term. We're gonna talk about whole life on next week. But since we're talking about children, you can get a whole life policy on your children up to $50,000 for a little bit of nothing.
Absolutely.
Ladies, if you like to go get your nails done, guess what? For that same price that you get your nails done, you can go get, depending on what you get now. If you're just getting a basic thing, costs like $20, $30. Guess what? You can buy two children's policies for that.
And the beauty of a term is that you can customize it based on your needs.
That's right.
And like for me, the reason why I want it, you'll hear about acceleration of a benefit. Acceleration of a benefit, of course, is a living benefit. You can access some of that money, take care of whatever. Okay. I had a mom and a dad that were stroke victims, and both of them were double amputees. Not to put that out there but you just never know.
You never know.
You just never know. The other things is, they have a rider. A rider is what you put on additional to a term to make it be cohesive to you or what your needs are. So you have a waiver of premium where the premiums will be waived. You add a little additional couple of dollars, your premiums will be waived, especially during COVID.
That's a beautiful thing, and I'm glad you mentioned that. Where you do have that rider, where if something were to happen, you won't lapse in your insurance, but you got to let the insurance company know. And yes, you do have to show proof. Okay, that's just what it is. That's a requirement. However, but we know, listen, I know that you are going to act in integrity, right? That your policy will not lapse. So what happens is when the policy lapses, now more than likely you're older, So that means that when you try to get insurance again, it's going to be more than what you were paying before. So if something were to happen, you want to make sure that you get that rider. And it's not a whole lot more. I promise you, it's not a whole lot more to it than to add that rider onto your policy.
Absolutely. Absolutely.
Yeah. And the return of premium.
I was just about to say, go ahead.
Yeah, that's one of my favorites.
The return of premium.
That's one of my, and especially like I love to offer that, especially to my younger clients, because
it's not that expensive.
It's like a savings account, right? So if you pay your policy every month, right, and you have a term policy, it could be 20, 30 years, whatever it is, and you add the return of premium rider to that, guess what's going to happen? Once that term ends, then you're able to get your premium back. That means just about, not all, what you paid into it, because you got to pay the administrative fees. I know I like to keep it real with you. You got to pay the administrative fees. But then guess what you can do? You can turn around, take that same money that you just received back for all those years that you paid into your policy, and you can buy a paid up whole life policy. We'll talk about that on next week. But I just want to put that little bug in your ear, honey.
And also on some terms, they allow you to convert
it
to a policy for the same premium, but you got to remember that your age has changed.
Correct.
So, but the beauty of it is you did not lose anything.
You didn't lose anything.
You didn't lose a dime. So, and it also have income disability.
Yes.
So if you are disabled, you're a working person, you need your income. You can add, I need to put that income disability on there. So not only will you get paid from your job possibly for disability after a certain period of time, but you'll also get paid from this insurance policy. So, I mean, there's various riders that you can do. We talked about converting it over to a whole life, which is beautiful. Everybody think you're going to lose money. That's just gone. It's gone. No,
it's not.
You create it the way you want to.
Yeah.
It's like we're co-creating certain things.
Right.
You create your insurance policy that same way.
Right. So let me ask you this. So, and since you mentioned that people think it's wasting money, if you have a car, you have to have car insurance, which is mandatory, right?
Yes.
So whether you're in an accident or not, you have it just in case. We have this saying: it's better to have it and not need it, and then need it and not have it. Unfortunately, in this business, we do see where people either they let their policy lapse. I mean, that's got to keep it real.
Yes.
Or they decide not to get it. I even had one client didn't want to get it because she got mad at her sons and said, "I'm not getting it for them." I said, "It's not for them. It's for you." But that's another story. And then what happens when you die and you don't have insurance? What happens is now your family has to try to figure out how to bury you. My question to you is that fair? Is that fair to put a unnecessary burden on family, and they're already grieving because you're no longer with us?
Absolutely.
So we all know everybody's gonna die. That's just what it is. We all gonna, I would love to say that we're all gonna transition to the arms of God, and we could put beautiful spins on it, but death is death. It is what it is. My question to you is, are you prepared to die? Or are you prepared to leave a legacy for your family? Or are you preparing to leave a burden for your family? Only you can answer that.
Hey, those are some good questions. Very good questions. Absolutely good questions. And I want to tell you guys, I had a client also who it really hurt. When you know that a person are able to get, but they just procrastinating or whatever the case may be. And I had this young lady. She was only like 33 years old. She finally made a decision. Okay, I'm going to get this term. She got like $300,000 worth of term. That's 2 years after. Soon as we did the application, she calls me back the next week. She says, Boatwright, did I get approved? And I'm like, well, not quite yet, but I'm sure you're going to get approved. You have no issues. She says she just went to an exam and her doctor said that she has cancer. Okay. And I'm like, oh my gosh, because even if she was to get approved, which she did, she got approved. But if she would have had this when I told her, she stayed out of work for almost 4 months.
Yeah.
Okay. Then she would have been able to access at least 100,000.
Yeah.
To take care of herself.
Exactly.
Or a large portion to take care of herself. And I don't know, I know you feel it, but I'm your audience. I'm hoping you can feel what we're feeling when something like that happens. It hurts me. I mean, especially when you know the person and how hard they work and how much they put into themselves. And so that's just to say, and 300,000 for her was a very minimum amount. So you just have to understand that you have to get it. And the beauty of a term, not only that, with the living benefits, I just love all the time, but it's also, you get child riders, your grandma riders. Grandma can also say, I want my grandchildren covered. Let me add my grandchildren on here. So there's opportunities to customize your term the way you want to. Renewable term. They have renewable terms that you can renew it. Now that's going to be pretty costly every year that you're trying to renew that term. Why not just go ahead on, make sure you have a term that you can convert to a whole life.
That's right. Okay. So listen, I hope that just us talking about the insurance, that if you don't have insurance, that you do get insurance. If you don't want to get insurance through us, listen, it's not about us selling you insurance, but it is about us educating you. We are here. Both of us are licensed agents if you would like to get insurance. However, I know that you may know someone that is a licensed agent that's probably been trying to get at you to get insurance, right? I want to encourage you to get insurance. It doesn't matter the dollar amount as to how much your policy is. Just like I talked about earlier, to have insurance, it's great to have insurance through your job. But the question is, if you're terminated or you decide to walk away from your job or your job is no longer there, right? What's going to happen to your insurance? 9 times out of 10, when you're no longer employed, you no longer have insurance. Even if you're buying additional insurance through your company, because it's through your company as long as you are an employee. Okay. I would love to answer any questions. Boatwright is here to answer any questions that you may have. Feel free to reach out to us. I always say this is a non-scripted conversation that I have. Absolutely. Where we are talking real talk, the real and the raw. We got to talk about these things that we do not, for whatever reason, don't want to talk about. Yes, and I understand talking about life insurance, talking about death is very uncomfortable, but it is necessary. And as I always say, thank you so much for being on this week.
One other piggyback on that term too. Have anybody, and I'm sure there's many because I have friends right now that have experienced during COVID being out of work, and your benefits will still be requesting of you to pay it from your job benefits. Wow. Okay. And they accumulate. That's right. At a certain time. So by the time you do, even if you get on workman's comp, you still got to pay your benefits. If you don't pay your benefits, then that's cancellation or whatever the case may be. Right. Or they'll take your whole paycheck. Right. To pay whatever you behind. Right. Or depending on why you're off work, whether it be short-term or long-term disability. Now, there are times where when you're out of work, your benefits suffer your health insurance, but the extra benefits sometimes stop. Exactly. And even life insurance. Yeah, car insurance, all those things that are paid through your company. Yes. Payroll. So that's something that you do want to consider and check with payroll about. That's just a little something. We just want to little something. Just to keep in mind. Thank you for that. And listen, this is your girl, Tanya Tobias.
with Can We Talk for Real? The real and the raw. Listen, real talk for real people. Girl. Yes. Love you enough to be good to you, absolutely. Okay? Let's live on purpose. Hey, let's live in purpose and let's live with a purpose. I love you all. Why? Because I believe in you.
I know that's right.
Yes.
Good.